previous trend is expected to continue upwards.
As the meaning of the word.
Absolutely,
Yeah.
right? Do you know how
Okay.
does a flag look like?
Like this.
A flag looks like it has a pole.
Yeah.
Yeah. What a trader can do if he spots this on a intraday chart, this provides you a wonderful risk to reward ratio.
Correct.
I have Tata Power, a monthly chart, 440, and the target is met.
Hello, strikers. Welcome back to the channel. I am Nimisha and we have Zubin with us. We have covered a lot of videos, and in today's video, we will be covering about the continuation pattern. Till now, we have covered reversal pattern, and I guess there are 6 types of reversal
Yeah.
patterns: rounding tops, rounding bottoms, double tops, double bottoms, head and shoulders pattern, and the inverted head and shoulders pattern.
Yes.
So stick with us till the end because we will be covering the live market charts. So let's get started with this video.
Great, Nimisha. So, after the reversal patterns, as I said earlier, there are chart patterns which are also continuation patterns, trend continuation pattern. So, what does it mean? Is that let's say the ongoing trend is positive.
Correct.
After that, there is some pattern formed over here, and this pattern is a trend continuation pattern.
So, does it mean
it looks
that
like a shape.
it will
looks like
continue?
some shape, and
Okay.
it means that after completion of this pattern, the previous trend is expected to continue upwards.
As the meaning of the word.
Absolutely,
Yeah.
right? And vice versa. If the trend is negative, there is a trend continuation pattern. The after the completion of it, prices are expected to continue
Going
downwards.
downwards. Yeah.
Right? So let's quickly get. Basically, there are two major kinds of patterns over here, continuation, and they are mostly bullish side. Okay, you'll rarely find a bearish kind of a pattern. So the first kind of a pattern is called as a flag. Do you know how does a flag look like?
Like this.
A flag looks like it has a pole.
Yeah.
Yeah, and this is a flag,
Correct.
right? So how does this looks on charts?
Yeah.
All right. So what do we have is a pole first. Pole is what is a pole? Pole is a big, sudden rise in a price. Okay. If you are looking at a daily chart, probably within 2 or 3 days, the prices quickly goes up.
Okay.
Okay. Sharp move up. Okay. With increase in volumes. Volumes are also very high. All right. And after this, there is a sudden pause.
Okay.
All right. So what happens is prices make something like this. Okay, some small candles here and there. Okay, for around 2 to 3 days, like this. All right. So now, and when these consolidation is happening, the volumes dry away.
Okay.
Okay. So this pattern over here, Nimisha, from here, all right, from this bottom to this top over here, this looks like a pole. And when you connect this looks like a flag.
Correct.
Right. So when you find something like this, when you find something like a flag, all right, when the prices breaks out of this consolidation like this with increase in volumes once again,
Yeah.
what a trader can do if he spots this on a intraday chart like a 15-minute or a 60-minute chart or on a daily chart, a trader can quickly buy the stock over here with a stop loss below the low of this
Flag.
trend line.
Yeah, trend line. Yeah. Okay.
All right. And what can he what target can he set? So the pole length becomes the target. So if this pole, if the stock price has risen up by around 50 points from here, if it has gone up by 50 points, you can calculate 50 points from here up. So if let's say this was 250 rupees over here and prices quickly went up to 300 rupees. On a breakout from here, from 300, you add 50 points and
That is the
350 will be
target.
your target.
So this is good for the traders.
Yes, and what happens is this provides you a wonderful risk to reward ratio.
Correct.
Meaning what your reward is 50 points, but your risk is very minimum. It may be just around 10 points or 20 points. So it provides a great risk to reward ratio.
So can we find this flag pattern in daily, like intraday, if someone is?
Yes, on an intraday
Okay.
chart also you can find, but again it's a maybe a trend. So on an intraday chart there is no set trend. The trend can just fluctuate.
Correct.
So it's better to find a flag pattern on a daily chart or probably on a weekly or monthly chart also if you find this. All right, so if it is a monthly chart, So 1, 2, and 3 months prices have steeply went up, and for next 4 to 5 months the prices have consolidated.
Okay.
So after that, whenever there is a big move up within next 2 to 3 months, again there is also a time defined. So within this pole length, it's of 3 months. So within 3 months, this target can be achieved.
Okay.
All right. So it's mainly this pattern, as I said, rounding pattern was for investors. I would say flag pattern is for for traders.
Hmm.
All right. So sometimes what happens is sometimes prices goes up steeply and then goes like this, forming a triangle kind of a pattern over here, like this.
From the pole.
Yeah, from
Okay.
when you connect these two tops and bottoms, when you connect, so it looks like a triangle. These two trend lines, they look like a triangle. All right, so this also looks like a flag only, but this is given a name called as pennant. So you have flag. This is a flag pattern. This is a pennant pattern.
Pennant.
Though both of them means the same.
Trend continuation
Yes,
patterns.
they are trend continuation pattern.
What
Would you
is
like-
the difference between the two? Like, is there any major difference
So
if we
there is no
spot?
major difference. A flag pattern would look something like this. I'll just show you on a fresh page. All right. A flag pattern would look like this: a steep move up in price, followed by like this, equal tops and equal bottoms over here. So this would look like a flag pattern. All right. How will a pennant look like? A pennant would look something like this, followed by a lower top and a higher bottom.
Forming a triangle.
Yeah, a higher bottom,
Yeah.
a lower top, forming a triangle. So
Okay.
this is called as a flag. This is called as a pennant. Both what to do? Wait for a breakout and buy.
Okay.
Expecting the pole length to continue. Expecting the pole length to continue upwards with a stop loss below this, with a stop loss below this. Understood?
Yeah.
Quite simple.
Yeah.
All right. Remember one thing, when the pole is being made, the volume should be very high. And when the triangle or the rectangle is being made, it's a consolidation where prices are going sideways. The volume should dry up. And on a breakout, the volume should emerge again. So that is a peculiarity of this particular pattern, continuation pattern. So let me very quickly take you this example. Before we move further, it's very important for us to understand that out of so many stocks, which stock is forming which pattern on what time frame chart, that's a big question mark. So how to find that quickly? What I do is I log on to web.strike.money, and in this portal there are various scanners. There is one scanner named called as parabolic SAR, which is generally used to determine stop loss level. But I was just curious enough to understand on 2nd of January, few days back, on the daily time frame chart, in which stocks there was a bullish reversal. And once I ran this particular scanner, the first stock that I found was Bajaj Finserv. And if you look at the daily time frame chart on 2nd of January, there was a big 7 to 8% move up in the candle with volumes, and after that consolidation, which confirms a flag. So that how simple and quick it is. If you also want to be quick enough in your analysis, immediately start your 7-day free trial, web.strike.money. Log in now. I have Tata Power, a monthly chart. All right. Now over here, what can you see? Can you see a steep rise in price?
Yeah, here and then the flag.
Yes, yeah, prices went up steeply. Okay, maybe over here from here. And what happened was you connect this line over here and you connect this line over here. So this looks like a flag. And once this flag is made, what is happening? What is happening? There is a breakout over here. All right.
Yeah.
Not so much volumes, but have a look at this. Have a look at
Later
this.
on the volume
Later
started
on the
going.
volume started, and this particular over here it achieved a target. So prices went up from here to here. So what was the length? The length was from 130 rupees to 270 rupees. All right, that's close to around how much? 70, 140 points.
140.
So from the breakout, you calculate from 270, you calculate another 100 points, you get 370, and you calculate another
40.
40, 50
Three,
points, you get 440 and the target is met. Within 1 2 months, 1 2 months, 3 months, the target is met. So that was Tata Power for you. All right, a classic flag. Let's look at another chart. In now, like this particular flag, no, you can also get something called as inverted flag, which is again very rare. But if you find, what you can do, the opposite. All right.
So does it in
there is a sharp
this?
move
Yeah.
down, followed by some consolidation, forming a inverted flag. And if there is a breakdown, you sell.
So the inverted flag occurs in a bearish market.
Yes. Okay. It's a short term pattern. It's a short term pattern. So if you find it on a monthly chart, yeah, few months, it can take few months to come down. It can appear on a daily chart. It can appear even on a intraday time frame chart or a weekly chart.
Got it.
Yeah.
Yeah.
So that was flag. And the second type of a pattern which we will cover is called as cup and handle.
Okay.
All right. Now we've learned in the reversal pattern something called as rounding pattern. Yes.
Yeah.
In the reversal pattern, we've learned something called as rounding pattern. What happens in a rounding pattern? In a rounding pattern, we have a downtrend. All right. And then we have something rounding pattern, and then the price goes up. In a cup and handle, it looks similar. All right. But what happens is, in a cup and handle, the previous trend is positive.
Okay.
All right. And then we have a rounding kind of a pattern over here. All right. And after this rounding pattern is formed, the prices consolidate a little bit here. So if you look at this, yeah, this looks like a cup. All right. Let me change the color. So this looks like a cup. And this over here looks like a handle.
Got it. So after this, are we supposed to like judge that the market will
explaining that?
Okay.
Yeah. So you understood how does it look?
Yeah.
All right. So once this cup and handle is made, we can wait for a breakout. And once there is a breakout, you buy, expecting this trend, previous trend, to continue upwards. All right. Rounding bottom is a trend reversal pattern. Cup and handle is a trend continuation pattern. I hope I've kept it, against each other so that, you and all of you can also relate to it easily and don't get confused.
Correct. Yeah.
All right. Whatever it is, rounding bottom is a bullish pattern. This is also a bullish pattern. So all you need to do is you can wait for a rounding breakout over here and buy. Or if there is a pattern like this, a handle forming over here, you can buy at an early stage also. Let's have a look at cup and handle. Again, remember, volume should be high on a breakout. All right. Let's look at Coforge out here. Now, what is the trend?
Uptrend.
This trend is up. After an uptrend, we got a gradual fall and a bottom over here like this. All right, forming a cup. Now, after this cup is formed, what's happening? The prices came down sharply. After this rounding pattern, the prices came down here sharply, forming a handle kind of a formation. And once this handle formation was complete, we can draw a trend line like this over here. And after this trend line was broken out with some above average increase in volumes, what happened to the trend? From here on, the trend started
increasing,
going up. Yeah. So this particular trend is in continuation from here. So Coforge, a classic example of a cup and handle pattern. Similarly, let's understand IRCTC. IRCTC could also be a cup and handle. It's not formed yet. So this is a live example out here. What I have spotted is we have a uptrend followed by a rounding kind of a pattern. And over here, you can draw a trend line like this over here and a trend line like this over here like this. Yeah. So this becomes your handle. And once there is a breakout above this with above average increase in volume, IRCTC could also be continue its previous uptrend.
Yeah.
All right. So that was about your cup and handle and flags.
Okay, so I think we are done with the continuation. There are
Continuation
two patterns in the
majority.
continuation.
These are the two ones, and mostly there are also triangle patterns. But triangle patterns we've covered in pennant also. So it looks like a consolidation pattern where the prices make a lower high and a higher low. Okay, forming a consolidation. Now this triangle can be a reversal pattern also or continuation pattern also. So if you find a triangle somewhere, you just have to wait for a breakout on either side and follow the
Correct.
direction.
Correct. Correct. So if it is coming down, it will be a bearish
Yep.
market, and if it is going uptrend, it will be a bullish
Bullish.
market.
Absolutely.
Thank you so much, Zubin. In today's video, we have completed the continuation patterns, which are the cup and handle and the flag.
Yeah.
So I think you guys have learned a lot. Drop down your doubts in the comment section, and we will try to solve those doubts as early as possible. For further videos, stay tuned and do not forget to share and subscribe to our channel Strike. Thank you.